Good morning. My name is Christopher Charlton. It's Tuesday, the 10th of August at 9:30. I'm here to give you the review from Center Asset Management on currencies. Basically, I thought I'd make this video because we believe that the time is near to start looking to buy the dollar on a medium-term basis. Obviously, tonight we have the FOMC meeting coming out, and we'll find out what the Fed has in store for us, whether they intend to start another bout of quantitative easing or not. I don't think they're going to do it now. I don't see any reason why they should. The market seems to expect one of two scenarios: either strong growth, which would be the normal outcome after such a severe recession, so you should have growth about 5 to 6%, or double-dip recession. Well, why not have a period of maybe 2 to 3 years where we're going to have anemic growth of maybe 1 to 2%? I think that's probably the outcome. Certainly Wall Street wouldn't like that. Certainly from their earnings potential capacity would be cut drastically. And the media, the CNBCs of the world also, because one of these guys are going to talk about if we don't have some roaring markets ahead of us. So there will be obviously a lot of people who are naturally not not interested in that happening. But actually that is probably the most likely scenario. The world is readjusting. Basically the private sector is deleveraging, paying back debt, and that is a situation that will take years, not weeks, to fulfill. That is basically a deflation. It creates a deflationary environment, and the Fed will be fighting tooth and nail to try to inflate the market to counteract that. Just by creating debt on its own right, it's unlikely they're going to succeed, but they still seem to think, or will be continuing on that route, whilst countries like, especially in Europe, and actually now in the UK, who seem to be leading the role with severe austerity packages, that is the right way to look at to counteract the problems that we've had over the last, let's say, 20 years. Sure, it's going to create an environment of slower growth, but slower growth isn't actually a bad thing. If it can cut off inefficient markets, can create new innovation, that is a good thing. And just growth created by debt alone is not the solution. So I think this is what the scenario that we're seeing. So at the moment, yes, the Fed is still trying to push the markets up. Are they trying to create another bubble? I don't think so. The plunge protection team is out there to prevent plunges, not really to force the markets up. I think that is gone. You can see the markets, despite this sort of guarantee of low interest rates that the Fed has now come out to say, and the carry trade has suddenly come out in full force, the dollar being sold off. Equity markets look tired. Commodity markets have rallied, but is that sustainable? And the carry trade can turn on a sixpence much faster to get out of the carry trade than for people to go into it. So we're seeing at the moment the dollar being sold off quite aggressively recently, on expectations maybe that the Fed will start a quantitative easing time. I don't believe that is the case. I think the markets have overextended themselves. So that said, is it yet the time to buy the dollar today? Well, first of all, let's see what happens with the FOMC. On the other side, we've got the Western world deleveraging. The emerging markets are still strong. The big question is, will the emerging markets be strong enough to pull us through this period of slow growth? The answer is yes, but in a 10 to 20 year time period, a 2 to 3 year time period, probably no. And China seems to be having its own problems in its own right. So if we look at, let's say, the Baltic Index, which is a reasonably good indicator of what's going on in the world, you can see that it's pretty dire. Growth, global trade is, let's say, it's not growing, but it has contracted, but it's not growing. Global trade is financed primarily in dollars. In this situation, with debt being reduced, there is a basic demand for dollars. So as equity markets turn lower again, which I think will happen by the end of this month, the demand for dollars should increase. And therefore we look at these sort of levels as buying opportunities for the dollar for the medium term through the end to the end of the year. This is a dollar yen chart. The yen actually, being at now nearly all-time lows. We look at this as a very good buying opportunities for the dollar yen. The yen, Japan has its own problems, basically, and will have larger problems as it tries to finance its deficits. It has managed over 20 years to wipe out 2 generations of private savings by investing into bridges too far, and will now face the problems of having to go to the international markets to look for help or to finance their deficits. In that sense, the interest rates must rise and the yen will fall. The dollar, on the other hand, in the US, the private savings are rising. So actually the argument that, yes, that foreign investment, that the US treasuries they're not buying treasuries, so that's bad for the dollar, is of course correct, but the actual argument will diminish. In fact, what is happening is, in a sense, Japan and the US are reversing their roles. So we could see dollar yen moving back up above 100 through into the year end. For the US dollar index, so using the index today rather than the euro or the pound, the same scenario, and actually from the technical side or technical analysis points, we've also pretty much reached the 61.8% retracement from the lows of 2009 up to 2010, around the 80 area, and we've got this sort of moving average in here, which looks pretty good. So we, as a support area, so the 80 area is a pretty strong support for the dollar. We expect it to move higher. Now, I'm not saying that in the next 2 weeks we still haven't yet seen the turnaround. It's still possible that the dollar can be sold off in the next couple of weeks. We could see the cable above 160, the euro at 134, maybe the cable at 162 is possible. But we regard those levels as buying levels for the dollar, selling levels for cable, the euro, and the other currencies, the Australian dollar, but I'm not. That's it for today. Thanks very much for watching.